All right, Juana is coming. Um, Juana, first off, thank you. Some of the most important problems I'm seeing right now that teams are looking to solve are in the financial tech space. A lot of automation has come alongside, promising a lot of things. You see people automating outreach, you see admin tasks, etc. But when it comes to financial problems to be solved, this is a really important problem to be solved because if you get it right, you have the ability to essentially be adding profit to the bottom line. If you get it, if you get it wrong, there's a lot that's at stake there. So I know that businesses are looking at this, the ones that are paying attention, and are really eager to find partners that are solving this well. And so if you can share a little bit about Amlock, you're the chief strategy officer there. Share a little bit about what you guys have built and who it helps and why it is that this actually matters.
Yeah, of course. Thank you very much for having me. I'm very excited to be here. You're very right. Data is becoming a lot more accessible, but that doesn't mean that there's many ways for us to be able to interpret what that data means. And this is across the board, but more specifically when it comes to financial data. So what MLOOK is, we're building risk intelligence infrastructure for financial institutions. And the simple way I'd like to describe it is lenders right now, they're still making capital decisions from fragmented snapshots of a business. While the business itself is constantly changing, they're still counting on snapshots and very stagnant data. So we help turn that fragmented financial data into a much clearer, continuously updated view of the business and its risk. So the problem we keep saying really is like a lender right now, they might ask the business for a bank statement or credit information or accounting data, a bunch of PDFs that still don't necessarily tell them who the business actually is transacting with, what their obligations are, if there's hidden debt, if there's concentrated revenue. So like this risk profile is ever changing. But right now there's no comprehensive way for the lenders to see this about the businesses that they're deploying capital to. So MLOOK acts as this intelligence layer where, really we like to say that we solve what we refer to as 4 V's. The visibility problem, can the lender actually see what's going on inside the business at all times? So and all of the financial data right now is really opaque in its nature, and really specifically in Canada, it's very interesting. For example, we have over 30% of businesses now transact through Interac e-transfer, which is a peer-to-peer transaction. However, the way the data descriptors are when a transaction is posted is very opaque. The lenders cannot understand where this transaction came from. And it usually is either a name or an email or some sort of truncated descriptor that we have no idea where it comes from. Payment processors, now a lot of businesses, they depend on online payments as well. The way these transactions are posted are, a lump sum or just like a one deposit. There's a lot of underlying signals that aren't entirely captured when the business goes to seek capital from a lender right now. So we solve this by, connecting to the entire business's financial ecosystem, whether it's their banks, their payment processors, their e-commerce, their accounting software. We resolve and enrich this data to give the lender a more comprehensive view of the risk profile of the business they're going to deploy capital to. So this is really the visibility problem. And there's a lot more nuances there, especially it's interesting for Canada, for example, we have bilingual issues where you have French names and English names, and we don't have a centralized hub where all the businesses are registered. So there's a lot of fragmentation of data where when a lender goes to deploy capital to a business right now, they only get like a really small slit of the entire picture that they could essentially get. And then people could say that this is being solved right now with open banking, which is really massive for Canada. And open banking does solve the access to data. However, it doesn't solve meaning, interpretation. So we help kind of on the visibility aspect of that. The second V is veracity. Can you really trust this information that you're looking at? On one end, AI has helped us in many ways, but it also equivalently made it a lot easier for you to fake documents, and this is as old as time, where as soon as banks started giving out money and requesting documents, people are faking documents all around, or finding different ways to go around the system, let's say. So veracity is, how can you become, how can you like not just rely on, for example, a single source of truth as your document, a single source of documents as your truth, but be able to cross-reference across all this different data that you're able to get, but also within all these new advancements in technology now that could backtrack, for example, where information comes from, how it's been edited, all of that stuff. So we really also want to solve the verification aspect, let's say the veracity problem, that's getting augmented now with AI. The third issue is velocity. So really, like, okay, we have all of this data, we've solved the idea that you can trust this data that we're giving to you, but right now lenders, they have a few people that manually do the underwriting and the matching, and they do. So imagine now we're like giving them all of this new work, all of this new data that they have to digest. It's going to be a lot slower than it is already. So what we do at Amlook is we automate a lot of the workflows around the decision. And the main idea is that, we work with financial institutions, and our goal is not to replace their systems or replace their workflows, but to embed within them and augment them. So we embed inside the entire life cycle of a lending workflow. We help them automate everything around the decision. So whether that's how you structure the information, how you configure rules, how you map it to underwriting, to trigger the next steps, who it goes to. So we can help at least with those cumbersome workflows that make the process a lot longer, while still keeping the decision itself to the creditors. Wherever they need to be, and so we kind of make it that as well. One of the biggest things with AI right now is the explainability aspect. AI is a black box essentially, but now we're seeing a lot more regulations come out where if you are using AI to help with your decision making, there needs to be an explainable aspect to it. And we really take this very seriously at Amlook, where we just act as this intelligence layer, explainable intelligence layer, but the decisions and the policies and whatnot to remain with the right parties. And then the last V, let's say, that we focus on is vigilance. And I especially really like this because we don't see it existing as much now, but I think it's this like missing piece into how we can like bring everything together. And it's like, okay, what happens after the money is deployed? Right now, the lender business relationship kind of ends there, and then periodic reviews of, let me just see how the business is doing, or I'm not going to know if anything's happening with the business till they don't make a payment or they default. So what we do for the lenders is we allow them to continuously monitor the health of the business. Like I said, the business is an evolving entity. You can get the money now, you can use your biggest customer, you can go and get another loan, or there's all of these like risk signals that could affect the risk profile of the business even after you give it money. So we kind of help the lenders see continuously the full picture of the financial health of the businesses that they support, so that they can be proactive rather than reactive. They can predict defaults, they can detect stacking, they can maybe make dynamic structures that also really help the business as well. Right now, a lot of terms are made with the assumption that the business is going to default. But maybe with this, you can since you have a full picture and a continuous understanding, you can give the business better terms under better, interest payment, however it makes sense for the business and the lender, and then you can have repeat customers, you can retain the businesses that you work with. So we kind of allow this. So essentially, our the way we like to tagline it is, risk is essentially a movie, but right now it's treated as a photograph. And we want to kind of keep it into this continuously evolving movie. But this is it in a nutshell.
So who would you say is your primary target client here? Are they investors that are looking at companies to improve them, make them more profitable? Are they banks that are being approached by these SMBs that are looking for financing and they're mitigating their risk while wanting to just turn a loan like profit? or are they the actual businesses themselves that are looking to become more attractive to investment or to banks?
So right now, we really are focused on three types of financial institutions. The credit unions, because they're member-based financial institutions that have a lot right now to compete with a lot of different institutions. So we're really looking to augment their processes. Alternative lenders, like the revenue-based financing, have you seen the you can get approved in 24 hours financial institutions now? So those type of lenders, and then banks, of course, to help them with their lending workflows and their underwriting and approvals. But through working with those institutions, we also offer white label dashboards to their businesses where the business can continuously monitor their financial health. On top of that, they can get mapped to we essentially mapped all the different grants and tax credits and opportunities that the businesses could be eligible for. And so this is, it helps the business get into better financial standing, which then helps them be more at a better place to get loans, essentially. So we kind of work like that.
If you were to picture like a story, you mentioned a movie, which I love the analogy of the comparison between a photograph and a movie. If you were to use the story analogy and try to play out more of the logical flow of how a customer hears about you and comes into your world and is integrated, onboarded, and has a functioning version of your dashboard or tools, what would that look like?
So I can give you kind of like what we're working with a couple design partners right now. So essentially they can pick out one lending product that they use, whether it's a line of credit or a specific type of revenue-based loan or whatnot. And then they have three options to work with them. Look, either they use our dashboard, which gives them comprehensive views of everything, or they can use our APIs, so they can pretty much integrate everything that we offer them right into their workflows. And so the way it happens is we work on one workflow. They can also create how they want the businesses to be onboarded. So the businesses that come to them will then connect their entire financial ecosystem, whether it's their Stripe, their Shopify, whatever other platforms they use. And then we essentially have a graph, a proprietary LLM that we've built that maps out all of these different entity relationships that assesses the business's risk. And then as well, the partner or the customer, depending on their workflows, would be able to use this data to make different triggers. Either they, configure it to certain underwriting policies, or if this happens, then it would be sent to this department. So we kind of make it really seamless and simple for the institution to be able to assess, digest all this fragmented data using our graph, use the outputs within their workflows, and then make decisions accordingly, and then monitor everything, whether it's within their certain systems that they use or using our dashboard that they like. And if they want to take it a step further, if they want to offer their businesses, for credit unions, it's specifically interesting because credit unions have a different type of relationship with their members and the people they work with. It's more intimate and it's more long term, so they can offer these businesses a dashboard where they can plug in and they can continuously monitor their health or get grants or be in good financial standing, be reminded of certain payments or whatnot. So we kind of embed into the entire lending life cycle.
And what is your take been on the adoption of some of these tools? You mentioned design partners, which are so important at this stage of ensuring product market fit. Do you find most of these institutions are eager to find someone to work together on solving this problem, or are they more reluctant to want to do it, perhaps strictly wanting to use an API, or just having a default position that pushes back against having a third-party partner?
We've seen it, to be honest, we've seen it all. Obviously, with new with new technology now, there's a lot of, it's like a race, you really want to be in, but at the same time you don't understand the risks that are associated with it, and there's a lot of risk with using third party. But this is why we're really we're really vigilant throughout what we do on the explainable aspect of it, and the research documentation and our documentation in general. I will say that there is a lot of eagerness, because a lot of these alternative lenders and the credit unions, they do understand the need for adopting next generation solutions in order to stay competitive and remain more relevant, essentially. But I'll say it's obviously, with these institutions too, it's a longer sales cycle. There's a lot more compliance. There's a lot more there's a lot more considerations that you have to take into place. But I would say the eagerness and the need is definitely there. Mostly also because open banking is just around the corner, hopefully. And with that comes, a lot of other issues that we might have not thought about. So we're really positioned to kind of support supporting in all of these potential solutions that we can offer.
I'm not sure if this is a fair question, but I'm curious. If you had to pick between having everyone in one category adopt your product, so you could just snap your fingers and have either all of the, or a significant portion of VCs, so those with money that are looking to invest, to have them use your product as the gold standard to then require actual deals they're working with or their portfolio companies to all integrate. Or if you were to have companies that are looking to use advanced tools to leverage things like grants, tax savings, advantages, if you could pick between the two, which would you pick?
I have two answers to this question. I have my emotional perspective, and then I have the more, founder hat, logical, scalable part of it. I'll start with the emotional one. I'm very attached to supporting businesses. We've been in SMB financing for 3 years. SMBs are the backbone of every economy, as people say, but they are the least supported. So I definitely have an affinity towards supporting businesses as much as possible, but B2C is always really difficult. So B2B is really the smarter approach, because then it becomes B2B2C. So that's really where the I guess split comes from. But our hope is that, by going through these institutions that have portfolio companies, then we are helping everyone across the board, really.
Very cool. So last question before we end the recording. What would you say, if you had to put your finger on one specific lever, what would you say is your greatest need right now for company growth?
So we've been bootstrapped for 3 years, and we just kicked off our fundraising round. So it's a small pre-seed round, and really the goal is just to, go to market faster, turn those design partners into actual customers, acquire more customers. So I would say that's really our biggest need right now. But more than that, I think it's really just continuing at the pace that we are with the same conversations and being introduced to other types of other institutions, potentially other pathways that we might have not thought about, to mitigate that whole long sales cycle problem that we're discussing. But I would say right now it's really our first round of investment that could just get us where we want to go faster.
Okay, awesome. And then the best place for others to find out what you're working on, what would you say?
I would say LinkedIn is our most active right now. My personal, and then we have our other founding team members, and our company profile as well.
Awesome. Well, Juana, thank you so much for sharing more, and look forward to seeing how you guys grow.
Thank you so much for having me. I appreciate it.